Hello, and welcome back to our geopolitical flash. Today, we are going to talk about a very interesting article which has been recently on the newspaper Corriere della Sera in Italy, and that puts in confrontation two points of view, one from our former Prime Minister, Mr. Mario Draghi, and another major economist, the American Paul Krugman. It's a sort of dialogue of the death between Europe and the United States. The question is it better to live in a society that innovates more or in one that allows people to live better and longer? Well, the starting point is a widening gap between the United States on one side and Europe from the other. Uh, According to this article, the GDP per capita in the United States is now far higher, really far higher than in the main European economics. About $94,400 in the US, compared with 65,000 in Germany, 61,000 in the United Kingdom, 52,000 in France, and 46,000 in Italy. That means that in Italy, the GDP per capita is now less than half of the United States. For Draghi, this gap reflects a deeper problem. Europe has lost momentum in productivity, innovation, and digital transformation. For decades after the Second World War, Europe was catching up with the United States, but over the last 25 years, the trend has reversed. Doug's point is not simply that America has stronger technology companies. It's a broader argument. It says that the United States has achieved a deeper digitalization of firms, production processes, and workflows. In other words, American innovation is not confined to Silicon Valley. It penetrates business organizations, management systems, logistics, services, and everyday corporate decision making. Europe, by contrast, often remains fragmented into national markets with insufficient integration in investment, innovation, technology, and capital information. So this is the first lesson for geoeconomics. Size, scale, and integration matter. Oh, yes. A continent that wants to compete with the United States and China cannot behave as a collection of small protected economies. It needs common capital markets, common industrial priorities, faster decision making, and a more favorable environment for innovative firms. Krugman accepts much of Draghi's diagnosis, but he adds some important correction. For instance, he argues that the American story should not be romanticized. Okay, the United States may innovate more. Yes, they do. They produce more technology, absolutely, and generate larger companies. And also, this is true. Okay, but this does not automatically mean that the average American lives better than the average European. When incomes are adjusted for the cost of living, in fact, the gap between the United States and countries like France, Italy, well, is more stable than raw GDP figures suggest. But the second point of Krugman is even more important. Krugman highlights that Europe, than in the United States and Italy, perform even better than the European average because the life expectancy is higher. Infant mortality, for instance, is lower in Europe. Italy has very good results from this point of view. And homicide rates, crime, basically, where the United States, they appear much closer to a society with the Syrian human development weaknesses, well, Italy performs at the end among the best in Europe, believe it or not. So this leads us to a fundamental question: the growth, what it is for. If innovation, technology, and productivity, they do not translate into longer lives, well, safer communities and better health outcomes, then GDP alone becomes an incomplete measure of national success. Also, Kennedy said something very similar many years ago. Okay. Well, institutional differences might be one possible explanation. In the United States, part of the hospital sector are influenced by private equity ownership, and studies suggesting higher mortality rates in some private equity owned hospitals. Then there is the political influence of the gun lobby in the United States, which is a factor linked to America's higher homicide rates. So the comparison between Europe and America is not simply about rich versus poor or dynamic versus stagnant. No, it's about different social contracts. The United States have built a powerful innovation machine, but with rather high inequality and surely weaker social protection. Europe has built a society on the other side that often protect health, safety, social cohesion better, but Europe risks to become slow, fragmented, less attractive for ambitious young innovators. But let's avoid the wrong conclusion. It would be a mistake to say Europe does not need innovation because Europeans live longer. Economic stagnation has consequences. It can reduce opportunities for young people, weaken public finances, limit defense capacity, and make welfare systems much harder to sustain. In fact, many European startups move to the United States once they become successful, which is a clear warning. Now, take a look at Ukraine. Has innovated rapidly in drones, interceptors, AI-assisted defense. It did not do so because it was richer than the United States or because it had better universities or deeper venture capital markets. It innovated because it had a powerful national motivation: survival. Its institutions adopted quickly, including through decentralized defense. This gives us the final lesson. Innovation is not just a matter of money, it's a matter of purpose, urgency, and institutional design. Europe's challenge then is not to imitate America in every respect. It should not import America inequality, social fragility, or oligarchic excess. But Europe must recover the capacity to act, invest, and innovate at scale. It must keep what works, such as social protection, public health, and quality of life, of course, while correcting what does not work: fragmentation, slow capital markets, weak productivity, and the inability to keep its most promising firms. In conclusion, the geo-economic question is not whether Europe should choose between living longer and innovating more. The real question is whether Europe can design institutions that allow it to do both. That is the strategic task of the next years. The answer will depend less on abstract economic theory than on political will. Europeans can innovate. Shall we?